Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, good to have you back on.
Happy to be here.
Stocks in New York were mixed overnight, moving towards a stimulus deal, but there's concerns over the new COVID-19 variant. The S&P was down for a third straight session, but the Nasdaq rose to a new high. What's the story in the global markets?
Okay, well, as you mentioned, the S&P fell as well as the Dow index. The U.S. market analysts are counting that with the fall in U.S. consumer confidence. The U.S. consumer confidence dropped for a second straight month in in December following November. The index fell to 88.6. That's lowest since August. And the economists actually expected the index to rise to 97.0 in December. So this has been in a sense, double disappointment. The index was at 132.6 before the coronavirus in February. Now, on top of that, tomorrow we may see a decline in the U.S. market, further decline, because, well, President Trump is having a bit of a temper tantrum. After the stimulus bill was agreed by the Republicans and Democrats in Congress, President Trump is threatening not to sign that bill because he wants higher payment per person. Right now, it's designed as $600 per person, but President Trump wants that amount to rise to $1,000 or $2,000, and to pay for that, he wants to cut other components of the bill. In a sense, he's fighting against his own party, Republicans, because it was the Republicans who wanted lower spending on the stimulus bill. It's not clear whether this is just a threat or whether he'll actually go through with it, but that'll act as an uncertainty in the market. Now for Europe, DAX, CAC, FTSE, they all fell substantially, 2 to 3% on Monday. They recovered about half of that on Tuesday. That's partially because of the new coronavirus variant that's showing in the United Kingdom, which has frozen all transactions, all movement between United Kingdom and European Union, but I think it's also because of the rising concerns about no-deal Brexit. Even before the coronavirus, trucks going from European Union to UK have been stopped on the borders, and it is getting to be very tough to import goods into United Kingdom because of the no-deal Brexit. For Asia, it's been mostly like trading today. There has been no Santa rally that we see usually in the late December. Japan and Hong Kong, it fell yesterday, but it rose a bit today. Shanghai, it rose yesterday and today.
And in Korea, the KOSPI rebounded from yesterday's sharp decline. Not so good on the Kosdaq, though. Tell us about the Korean markets.
Okay, well, the interesting thing about KOSPI is that it has been rising for quite a bit since October. And then since November 23, when the KOSPI hit a new record high, it did not go up every day. But every day that it did go up, it hit a historical high. That trend came to end today, even though the market ended up. Because it fell so much yesterday, it did not rise to a historical high. This is the first time that the up market has not hit an historical high since November 23rd. Now, the major reason why the market rose today, KOSPI rose today, is that there is rumor going around that a joint venture of LG Electronics and a foreign company will sell electronic batteries to newly announced Apple electric cars. So that has played a major part in driving the market up today. Now, for Kosdaq, as you mentioned, it's been a continuous rise since December 8th. It may be because the coronavirus is worsening. This is a case where bad news is good news for some members. Kosdaq is mostly technology stock, and biotech and electronics and semiconductors will probably do better if the coronavirus distancing increases and is extended.
Well, now, Professor, the government has downgraded its growth forecast for the South Korean economy this year from minus 1.1% to a more general minus 1% range, seeming to reflect some more uncertainty caused by the new restrictions in Korea. We're running out of time, but tell us about the risks you see and the prospects for an economic recovery.
Okay, well, the recovery from recession really depends on when coronavirus comes under control. Epidemiologists say that once you start vaccination, it'll take about 6 months to have some kind of a herd immunity. Once coronavirus is under control, coronavirus recession becomes a regular recession, and we know what to do with regular recessions. So once the coronavirus is under control, it'll probably take about 3 to 6 months to get out of that recession, assuming that not too many firms go out of business. But even if we take this relatively optimistic scenario, that means we'll be stuck in a coronavirus recession for about a year. If the vaccination starts next February, as the government has announced, then that means it'll be end of the next year or the beginning of the year after, 2022, when we get out of this recession. It's going to be a long-term problem. But for the short term, we have gone on to an increased distancing, and it's questionable whether this distancing will end at January 3rd as government hopes, or whether it'll probably be extended, I think. But that is going to be the big uncertainty in the this particular in the short term. And then you have to remember that Korea's relatively good growth performance this year is not necessarily because of any underlying economic factors, but because Korea did distancing so well. If the distancing, even if the problem of distancing and coronavirus is solved, there is still the problem of low growth, fundamental problems that we have seen for the last 3 to 5 years.
All right, Professor, we'll have to leave it there for today. Thanks so much for sharing your insights with us, as always.
Thank you.